So gold has hit $2,400 for the first time ever. Now this is a really interesting time, and we're going to be breaking down exactly why it's interesting and the exact way that it's actually occurred. This is an unprecedented time with gold hitting $2,400 because the stock market is at highs as well. Inflation is high, and this is not something that usually occurs at the same time. With gold prices this high, we need to look into the reasons behind it and also find out who exactly is doing the buying. This is becoming very interesting because what we're seeing in the markets hasn't happened in my entire 10 plus years of trade in the markets. More importantly, when I sat down with Adrian Ash, the Director of Research of Bullion Vault, who looks after 3.3 billion in gold, hasn't happened to him in over 25 years. So let's look at this a little bit more and find out exactly what on earth is going on. And gold is traditionally seen as a hedge against inflation because it's priced in US dollars. So if US dollar falls in value, then you'll find that gold will go up in value from that. And this is a hedge against inflation. And with interest rates sitting at a higher level, you usually find that traders and investors will find more attractive investments other than gold. So for example, sitting in cash, that looks rather good. Also stocks and equities with higher interest rates, you can see different opportunities within the markets. Now naturally, when we see interest rates decrease in value, then you find that gold becomes more attractive from the potential upside gain that it could have. So let's put that into perspective, just looking from an interest rate level. When interest rates are set to go down, gold will move high. Well, at this moment in time, interest rates are high, gold prices are high. So that doesn't tally up in what we're looking at if we're looking at the traditional movement of gold, just from an interest rate level. So usually gold is priced high when they feel that the stock market is vulnerable and there's a large amount of volatility and risk and uncertainty within the markets. However, we are seeing the stock market at highs and we're seeing gold at highs. Ultimately, this is something that we don't really see that often occurring. When you have the stock market high, you definitely don't usually have gold high. You usually have gold low and stock markets high. And then when there's fear and uncertainty within the stock market and there's a correction and a sell-off, you'll usually see investors then turn to gold. And this is traditionally how you would see the markets play out. This is often because they want to offset their risk in their equities positions and overall move into gold to get away from that volatility and correction that they're seeing within the equity market. Now we're seeing stock markets at highs, we're seeing gold at highs, we're seeing interest rates high. So there's two different variables there that we would necessarily not see with gold prices the way that they are. So we have to ask ourselves, who is buying gold? Because this has fallen way out of the remit of the gold behavior. Usually when we see those interest rates and the stock market in the current situation, we don't see gold prices at highs. Now we have to look into this a little bit further, and when I sat down and spoke to Adrian Ash, the Director of Research for Bullion Vault, he was saying this is not the Western investor that is buying up gold. And when we broke down that conversation, it was very interesting, and here's what some of the findings were. When we started to talk about Russia and Ukraine and how the world realized what those sanctions look like, getting kicked out of SWIFT and having those sanctions put against Russia, China learned a lot about that and how the US would potentially react to China if they was to invade Taiwan. This is actually the Chinese investor that is buying up gold. Now, there's two different ways that this is getting done. Firstly, the Chinese Communist government is buying up gold. Now, that is an interesting concept in itself because that is almost looking at a pre-war, pre-planning aspect of if they were to invade Taiwan, these sanctions would potentially come against them. And by buying up gold reserves, moves them away from that overall risk against the dollar and against America. So I found that rather interesting from that concept of the podcast and the conversation, because it was almost like China is learning from what the world has reacted to against Russia in their invasion of Ukraine, and China is now looking to potentially offset that risk and prepare potentially for pre-war action, or if anything, just preparing to stay away from that dollar exposure. So I found that concept very interesting. Now, when we start digging down into the Chinese economy a lot more, we start to look at their stock market. So when we look at the Shanghai Stock Exchange, it reached highs around 3,700 in 2021. We're now trading around 3,000. So you can see how we're very much off of the highs there on the stock market since 2021. Being in 2024, we would expect some sort of growth. Now, if we're a retail investor and we're within China, that's obviously going to be concerning for us to see that we're not seeing gains within the markets. And then when we look at the FTSE A50 for China, this is derived and put together by the FTSE Group, and looking at the top 50 companies there within China. Now, this index was trading at 18,000 during 2021, and it's all the way down at 12,000 now. So you can see how their stock markets and top performing companies are not performing at all. And then on top of this, we had the Evergrande Group collapse, which was one of the largest real estate companies within China. That was collapsing. This is a big issue. And overall, what this has sparked in China is what looks like a commercial property bubble. And overall, the Chinese investors are turning to what they know, and that is investing into gold. And we can see this within the futures market within Asia about how they're trading at a premium to be able to get hold of the likes of gold and silver. And we're seeing those rallies coming from the Chinese investors, not the Western investors. Now that's really interesting because they're protecting their money against potentially a commercial property bubble, as well as a heavily underperforming stock market. Now my question here is, which is super interesting, is that with gold trading at $2,400, we are in unprecedented times. What does that mean? It means that we are due a stock market correction on the US markets and the UK markets. These rallies have been moving very, very good. And overall, they're not going to keep just moving to the upside. We are in election year. There is going to be volatility. So a correction needs to take place. So what happens then when the stock markets start to sell off? Theoretically, Western investors should start moving their money out of equities and into gold. Will they do that now with gold sitting at all-time highs? That's the question. Now, the second point here is that we know that interest rates are high and elevated, and overall they're not likely to carry on increasing. They are more likely to decrease. Well, we said earlier in this video that when they start to decrease, we should start to see gold prices go higher. So we're in this weird situation where there could be a double whammy here. We know interest rates are going down, so that should make gold go higher. And we know the stock market overall should be correcting soon because we have got one of the, well, Donald Trump is right now in a criminal court case, and that is going to be heavily volatile on the outcome of what that could mean for America and American presidential candidate. So we have got so much going on, and this volatility within that US markets and the fact that interest rates are dropping overall should signal that gold prices should move higher. But this is all very interesting, and it's the first time that it's ever happened in this situation. So I got no idea what on earth could gold do, but if we're going by the textbook, we should actually be saying that gold should be going much higher based on the premises that we are due a stock market correction, based on the premises that interest rates are set to fall, and also based on the fact that we are set to experience more political issues. We have got Israel and Iran right now, with Iran shooting drones and missiles at Israel. We have also got the tensions still between Russia and Ukraine. We have got the tensions from the presidential candidate in a criminal court case and the run-up to the presidential elections in the US. We have got China and Taiwan. This is all added volatility, and theoretically, these are things that should drive gold prices higher. So I'm ultimately saying that we should see gold prices go higher, but this is what you're witnessing in the market is a first of its kind that we're seeing in gold prices. Get in the comments if you think gold is going higher from here, or if you think actually investors are going to stay well clear of gold at the all-time highs, regardless of all this geopolitical tensions that we are set to experience. Guys, it is awesome news that we have hit the top 100 UK investment podcast. I've linked it in the description. Make sure you follow the podcast. We have some awesome guests on the show and we discuss everything about investments. If you want to improve your portfolio, your diversification, or just get some knowledge from some individuals that are managing billions, then make sure you check out the Wise Wealth podcast.